German measures, setting her up for a fight with regional leaders. And HSBC's turnaround picks up speed. The bank surges in Hong Kong as speculation grows around a return to dividend payments. So European equity markets just about to open up here for Wednesday's session. A bit of a focus on that banking sector, as we were hearing from our colleague Danny Berger just ahead of the market open. Of course, there is this HSBC move, the recommendation there from one of the banks around HSBC, and also the bigger questions around dividends for European banks as a whole. What kind of restrictions will or won't be in place into 2021 around the banking sector and its ability to pay dividends is certainly a focus for investors. I can tell you that HSBC has jumped up by just over 2% at the start of the European equity trading session, so certainly that is something we are watching. How will the concerns around the ski season and the holiday period for the French economy, how will they be played into a market that is broadly quite positive, broadly still seems to want to buy the risk-on story as we look ahead to better vaccine news ahead in 2021? Well, I can tell you that some of the stocks that you might have expected to stumble a little are trading higher. So EasyJet, for example, up by 0.4%. We also see Accor, which is a French hotel business, up by just over 2%. So it's interesting to watch the French reopening story and the speed of it, and to see how the market responds to that. So let's get to the broader market moves. And the Stock 600 is up by around 0.1%. The FTSE 100 up by 0.3%. The CAC and the DAX both move to the upside. So European equity markets are opening higher. That's after the S&P closed at an all-time high. Global stocks are on track for their best month in a record, on record, as I said in our headlines, as investors continue to pile in to these cyclical sectors. Let's talk now to Janet Mui, Bruin Dolphin Investment Director, who's with us this morning. Janet, very good to speak to you. So how much are you repositioning the portfolio around cyclical themes, given the better vaccine news that we've had over recent weeks?
Yes, we think that the vaccine development has been very encouraging because it is a sign that there's hope we are going back to normality in 2021. So actually, after the U.S. election, we have deployed some of our cash holdings and added to global equity because we think that the markets will continue to be positive on a 12-month view, primarily because the uncertainty from the election is gone, and then we've got more positive developments on vaccine and the economic data. There may be some short-term setback, but generally it is much better than have expected. And so we are positioned for a recovery in 2021. And in terms of the cyclical areas, we've added a bit to Europe ex-UK equities, which we think are the most cyclically exposed areas amongst the developed economies. And we've also added to Asia ex-Japan regions because that area is very cyclically sensitive to the global recovery as well.
Yeah, and how crucial are low interest rates to your investment thesis at this point then, Janet? I was looking at the Goldman Sachs gauge of financial conditions. It's currently registering very close to its lowest ever. So interest rates being as low as they are, of course, suggesting, and this particular gauge, the way it reads that information and other criteria, suggesting that financial conditions are extremely accommodative. Is that something that you are assuming, and how far into the future do you assume that to be?
Yes, that is one of our expectations, which is lower for longer interest rates. basically, low interest rates will support most assets in terms of equities because of a lower discount rate, in particular for growth equities. And we think that this should continue well into the future, in the foreseeable future. Basically, the Federal Reserve has already set the expectation they're not going to raise rates until 2023. So I think same for other developed market central banks. So we expect that rates are going to stay at near 0% for developed markets for at least a couple of years or even longer.
And where do you think the valuation gap needs to close geographically, Janet? I was looking at a chart earlier that showed that Europe is undervalued compared to the United States. This was on a forward PE 12 months. But Asia also undervalued. And given the strengths that we've seen in Asia in handling the coronavirus, I was quite surprised by that. Do you expect that value gap for Asia to close?
Yes, absolutely. We expect that the value gap between Asia and US to close. That's because we are going to see more synchronized global growth next year. And when you have that, usually the dollar weakens, and that will support Asian equities. And also we think that the area is more exciting in terms of growth, not just the near term, but in terms of longer structural growth areas. So we think that the area is undervalued versus the other markets, like the US in particular. And also the other area that the value gap needs to close would be the Europe ex UK region, which is an area that we've added to as well previously. As I mentioned, that area has lagged significantly versus the US, primarily because of the sector exposure. But we think that the cyclically exposed sectors in Europe ex UK equities should start to perform relatively better next year.
And Janet, you do like US stocks. So even talking about those value gaps closing, you do still like some US stocks. Is it the growth side? Is it the tech side you want to play there? Or do you prefer to play tech in other markets, for example, in China?
So our view is that the positive development in the vaccine and other various factors like supportive monetary and fiscal policy, they're going to lift all boats in the markets, basically. So as a result, we favor global equities, which we added to the US, Europe ex UK, and Asia ex Japan. And for the US, yes, we like the growth areas. That's because, for the cyclically exposed sector, we added to Europe ex UK and Asia ex Japan. But in terms of the growth area, US still dominates in that area. And we think that, well, even if there is a, more rotation or there's further to go for value cyclical areas, we don't think that the tech stocks will lose its attractiveness to investors because that's a long-term play. It's still going to generate above GDP earnings growth. So we still like that area, which is the best being played in the US equities.
Janet, thanks very much. Stay with us. Janet Mui, Bruin Dolphin Investment Director. More thoughts from Janet shortly. HSBC shares gain both in London and in Hong Kong. Europe's biggest lender may soon resume paying dividends as a turnaround gains steam. Certain brokers turning increasingly positive on HSBC shares. They've already rallied a lot. More on that next. This is Bloomberg.
We have this big issue on the capacity to pay the dividend, which is certainly the major factor which explains why the European banking sector is down this year. And I think to valuation, which makes no sense actually compared with the long-term potential of the banks.
We are still in a stage where we definitely do not really know what's going to happen. We will closely monitor over the next couple of weeks and months.
The ECB is being responsible to make sure that they see clear line of sight from an uncertainty perspective for the corona. In light of what we discussed about the second lockdown, we do reserve dividend for payment. So whenever that happens, we have reserved those dividends, allowing us to continue our business while at the same time providing the right returns to our shareholders.
I look back there at some of the European banking executives talking to Bloomberg about the dividend story earlier on this month. And let's linger on that story a moment. HSBC shares surge in London, trading on optimism that Europe's biggest lender may soon resume paying dividends as its turnaround gathers speed. Let's get some analysis now. Jonathan Tice joins us, senior banks analyst at Bloomberg Intelligence. So, Jonathan, good to speak to you. So is HSBC a one-off, or are we expecting the European banking sector to follow suit? I suppose we should start with what we do and don't know about HSBC's ability to pay dividends and any conditionality attached.
Sure. Good morning. Well, I mean, HSBC is a slightly special case because the reason they got so beaten up was a lot to do with their Hong Kong shareholder base, where the fact that a UK regulator stopped the flow of dividends from a profitable bank kind of irked shareholders, and being retail, it mattered a lot. Yes, I think they can restart. They were quite vocal at 3Q. But what's interesting, HSBC, as a sort of investment thesis, isn't about capital return. Yes, it's massively well capitalised, but they want to be a growth bank, so they want to use some of their capital to grow. They've got a huge restructuring plan. Very interesting story there. I mean, it's been one of our focus ideas in Bloomberg Intelligence. But when I think about capital return for the sector, which we've been saying for a while now, we think for the bigger, stronger banks, provided they meet certain criteria, they will be allowed to restart dividends. HSBC wouldn't be one of the ones you'd look at and think, right, well, I want to play bank capital return. This is the name.
Okay, so that, yes, and so that sets it apart perhaps from the next question, which is about what the ECB wants to do here. And of course, the HSBC regulated, as you say, in the UK from this perspective. But what is the ECB looking likely to do? We see reports that perhaps the dividend ban might be lifted soon, but what's the thinking?
Well, I mean, the thinking originally was we don't want banks to distribute because we want to bolster capital cushions. And they put a number of about 30 billion euros on the extra capital that could be retained by refusing any payouts. What we think will happen is, yes, they're going to look on a sort of case-by-case basis and say, provided your internal models aren't silly aggressive and that you've got a nice capital buffer and you are returning to profitability, as long as all these numbers make sense, yes, you can restart, which to us says, from the BMPs of this world, ING, KBC, there are quite a few names that have got plenty of capital. The other regulators are probably likely to follow as well. We know FINMA in Switzerland, that they seem pretty happy to let their banks pay, and UBS had a very good slide at 3Q talking about where they were going to pay back and the accruals to date. So for the bigger, stronger banks, yes, we think they'll, with a sort of sensible flight path, be allowed to restart and probably, rather than looking at sort of 100% capital return of a year's profits, clearly 2020 is depressed anyway, you're talking 40, 50% payout ratios, including buybacks to start with. So it's really 2021 onwards that the capital return becomes a material part of an investment case.
Okay, thanks very much, Jonathan. Thanks for bringing us the analysis. Lots to watch then on the European banking sector. Jonathan Tice, senior banks analyst at Bloomberg Intelligence. Some of the banking stocks in Europe trading higher today, which is why we focus on that. We're just getting some lines coming through from Ursula von der Leyen. She is speaking currently, saying that the EU is prepared for a no deal with the UK, reiterates that the EU has full trust in Michel Barnier. The next days will be decisive for a UK deal. The next days, says Ursula von der Leyen. Does that mean that... well, are we really going to see some progress on this? Just watching the pound, 133.80. It has been a little stronger this morning, and it continues to be just a little bit stronger, so not moving an enormous amount on that. She's going on to talk about the recovery fund and the importance of a deal there. Now, Janet Mui, Brewin Dolphin Investment Director, is still with us. Janet, your thoughts on the banking sector? We were just hearing there from Jonathan Tice about whether banks will or won't be able to go back to paying dividends. How important is that as a factor for you?
Well, it is a sign that things are getting back to normal in 2021. So that's a good sign. And definitely for a lot of investors, dividend payment is a very important factor for the choice. But I think, if you're looking for, capital return from these bank stocks, I think you still really need higher bond yields to happen in order, for the banking sector in Europe to outperform. And it looks a little bit difficult because, bond yields are stuck at negative and ECB very unlikely to raise interest rates for the foreseeable future. So what it means is that the profitability is going to be continually squeezed, and that, the interest rate margin is still one of the biggest contributor to the profit. So they may well still have a run for these bank stocks, but we're not certain whether this can continue for a long time or outperform other areas of the equity sectors.
Okay, and a lot will depend, of course, on the yield curve, I suppose, and that's often part of the conversation when it comes to the banking sector. Just thinking about other sectors in focus, Janet, right now, pharma is in focus, of course, because of the innovation that is taking place there, and some people are very excited about new technologies, for example, at Pfizer and BioNTech when it comes to the vaccine and the mRNA vaccination in particular. What do you see to get excited about in pharma at the moment? And is it the vaccine conversation, or actually is it far away from the vaccine conversation? Is it other matters that you think will push pharma higher?
Yeah, I think in this pandemic, people realize how important healthcare it really is. So I think the vaccine news is very positive, but I think a very positive long-term implication for the sector is that, this is unprecedented. Usually it takes 10 to 15 years to get a vaccine approved, but we may get that actually within a year. So that's really a huge breakthrough for the medical sector. And I think it really paves the way for future breakthrough because, for example, the Pfizer-BioNTech vaccine is kind of like an experimental vaccine, different from a traditional vaccine. So it really suggests that, we have a breakthrough in that, and that would be better for the medical and humanity as a whole. And we also, after this pandemic, we're going to probably see more acceleration towards the tech side of the pharmaceutical sector, which is very exciting. We're talking about, for example, the remote healthcare. You can't see a doctor physically, but you can talk to them over a phone, and you have, remote devices that you can carry to check your health status, etc. So we think those areas are very exciting, and it's definitely a breakthrough for the medical sector and humanity.
And Janet, another sector in focus, of course, aviation. My colleague Manus Cranny caught up with the CEO of Emirates Airlines a little bit earlier on today. This is clearly a sector in flux. It stands to benefit greatly from the vaccination news, but it's just maybe too early for that. How do you play aviation at this point?
So I think the vaccine news is very positive, and we think that for that to continue, we need eventually COVID to be recalled, possibly, and also the widespread distribution of that vaccine, which you need actually an enough proportion of the population to get vaccinated for you to achieve certain immunity. So we think that it will take some time. The optimistic scenario that it will take a year for that widespread vaccine distribution. So it will take some time. And we're not surprised if there will be some back and forth in the share prices of these companies, because until we get that eventually get rid of COVID, there will be some back and forth and noises around the health situation. So we won't be surprised if there is some more positive story on the airlines, because their prices are just so depressed. They have been sold off excessively. So, but it is unclear to us whether, structurally speaking, they're attractive, because, after this pandemic, people are still going to focus on green recovery, climate change, and that is going to fundamentally impact the airline sector because they're being scrutinized for their emission of carbon.
Janet, thanks very much for your time. Janet Mui, Bruin Dolphin Investment Director, with some of the investment themes that she's looking at this point. Janet will be continuing her conversation with us on Bloomberg Radio at 9 a.m. UK time. Carolina Hepker and I will both be there for the 9 o'clock UK hour. Let's get a Bloomberg Business Flash, some of the top corporate stories that we're covering this morning here at Bloomberg. Fintech startup Stripe is said to be chasing new funding that could double its valuation. Sources tell Bloomberg the new round could put it at more than $70 billion, or even as high as $100 billion. Stripe competes with Square and PayPal and has benefited from the pandemic, sending more shoppers online. Gap is reporting weakness at its namesake brand and Banana Republic, but strength at the Old Navy business helps sales jump more than expected. The retailer is closing poor-performing stores to focus on its online offerings. The company still isn't providing long-term guidance due to uncertainty created by the pandemic. Bitcoin mania is back. Retail traders are piling into the cryptocurrency, driving prices back toward all-time highs. It's now up more than 40% in November alone to levels not seen since 2017. And the frenzy is spreading to other coins, with Dash and Bitcoin Cash both jumping. That is your Bloomberg Business Flash. Coming up on the program, as the virus continues to rage across Europe, leaders are grappling with how to keep their economies afloat. We discuss that next. This is Bloomberg. Welcome back to the European market open this Wednesday morning. European equity markets losing a little bit of their early enthusiasm. The past 24 hours dominated by a positive risk-on story. That's lost its groove, it would seem, through the Asian session and now into Europe. US futures now fairly flat. NASDAQ futures are higher. Emmanuel Macron says he'll start lifting France's lockdown from Saturday, but Angela Merkel proposes tightening German measures, setting her up for a fight with regional leaders. Let's get the latest from Brussels then on these various divergent approaches, perhaps. Tell us more then, Maria Tadeo, about the approaches we're seeing from these various leaders.
Yes, Anna, and I think you make a very good point because there is some whiplash in the measures that have been announced. If you look at what Emmanuel Macron said yesterday, is that by December 15th, he wants to end the lockdown that's in place now and replace that by a curfew. Life would start to look similar to or something similar than what it looked like before the second wave. And by the end of January, the country would be back to semi-normal. Now, when you look at what Angela Merkel is saying, is I would say to some extent the opposite, in which she wants to make those restrictions still very much apply until December 20th. That is right before Christmas. And in some cases, those restrictions could be increased. Now, the government in Germany, and in particular Angela Merkel, focused on keeping that infection rate flat as we head into the Christmas holiday. So I would say this morning, to some extent, it's a very different approach from the French and the German, and they're both taking very different directions.
Yes, and we're seeing Ursula von der Leyen of the Commission speaking this morning, saying we're risking a third virus wave after Christmas. I wonder if she's weighing into that conversation. She's also talking about Brexit. What's she been saying?
Yes, look, there's a message from von der Leyen in which she repeats that the lesson here is that perhaps Europe opened up too much too quickly after the summer, and that triggered that second wave. And she now says there is potential for a third one. Now, it's also interesting, and I would say that she is now giving a very clear timeline for the vaccine. You know, we already know that last week she hinted that the European Medicines Agency could give the Pfizer vaccine the go by the end of December. Now she says the first group of Europeans could get the vaccine and did by the end of the year. So there is some light at the end of the tunnel. When it comes to Brexit, not that much clarity. You know, she says we're still working to get this deal, but if we don't get it, the European Union is ready for a no deal.
Yeah, she also says the next days will be decisive. We will see if that turns out to be the case. I feel like we've said that before. Maria, thank you very much. Our reporter Maria today, of course, in Brussels, keeping across all of those threads for us. Up next, German business leaders are calling on the US to stop sanctions over Nord Stream 2. We speak to the CEO of one of the stakeholders in the controversial pipeline. That conversation with OMV coming up next. We'll talk about the geopolitics, whether a move to a Biden administration really makes a big difference when it comes to Nord Stream 2 or not. Will we see continuity in US policy there? We'll get an assessment. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into your trading session, and European equity markets losing a little bit of their earlier enthusiasm, but still up by 0.2% on the Stoxx 600. Let's get a Bloomberg First Word News update. Here are some of the top stories we're covering this morning at Bloomberg. Treasury Secretary Steven Mnuchin is moving over $450 billion beyond the easy reach of his presumed successor, Janet Yellen. He's putting the money, most of which had gone to support the Fed's lending facilities, into a fund that requires congressional approval to be accessed. Democrats are criticizing the move, with one calling it illegal. The Treasury rejects that analysis. The dose of the Oxford AstraZeneca vaccine that showed the highest level of effectiveness was tested in younger people. That is according to the head of the US vaccine program. Giving an initial half dose before the full dose was 90% effective, but the age of the group was capped at 55. A wider trial with 2 full doses was only 62% effective. The EU's top diplomat is warning about the possibility of tougher sanctions on Turkey. That's over renewed tensions in the eastern Mediterranean between Turkey and Cyprus. The EU's foreign policy chief says the bloc's leaders will tackle the issue at their meeting in December. Hong Kong's leader Carrie Lam is vowing to continue strengthening ties with China. She used her annual policy speech to defend Beijing's tightening grip on the financial hub. Lam says her aim is to restore confidence following another tumultuous year. One of her key economic policies is to scrap stamp duty on commercial properties. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Now, Germany has reaffirmed its rejection of US sanctions against the Nord Stream 2 pipeline. That is according to a government report seen by Bloomberg. Separately, some of Germany's biggest exporters to Russia are calling on congressional Democrats to oppose the restrictions. Let's speak now to one of them. Joining us is for an exclusive interview is OMV's CEO, Rainer Seele. Very good to speak to you then, Rainer, this morning. And in terms of the OMV perspective, really good to get into a conversation around Nord Stream 2. Do you expect the new US administration to have a very different policy on Nord Stream 2, or will we see continuity?
Well, good morning, Anna. Good to talk to you again. Of course, I do hope for a change with the new President-elect Biden. But we have to remind that it was not the president who was asking for a sanction act, it was the Congress. And in this context, I think the Congress has to change the mind and the initiatives. It's definitely not good to see that additional threats on additional sanctions against a pipeline will be good to rebuild the trust in the transatlantic relationship. Europe is ready to have with open arms a discussion from my point of view, but it wouldn't be a discussion on a pipeline project. This is an economic project. It is what kind of political relationship and political answer European politicians are now going for. In this context, for OMV as a financial investor in the project, this is of utmost importance that we have not to erode the good investment climate which is needed to be invested into an infrastructure for a climate change program underway, because that's what is needed.
Okay, but specifically around Nord Stream 2, I mean, does Europe still need Nord Stream 2? Some people point to LNG imports and just increasing the supply that way. Is that a possibility?
Of course, there is a competition between LNG and Nord Stream 2. That's one of the reasons, as an interpretation, we might see these sanctions coming up. From my point of view, we have a program in Germany that they would like to switch from coal into gas power generation, and I think additional gas quantities are needed. In our analysis, if Nord Stream 2 is not coming, definitely we Europeans need to import more LNG, and that's my clear reading.
That is your clear reading, and where do you expect that to come from, Rainer?
Well, I think we will have the choice to contract new LNG, but most of it, I think, a clear address is US LNG, of course.
There's a lot of talk in Europe about the hydrogen fuel as a potential for adding into the European fuel mix. Where in the hydrogen supply chain are you interested in investing?
Well, it's a huge potential. OMV has technologies to produce the hydrogen, so that's our main focus. How can we produce clean hydrogen? I don't want to limit myself to renewables as a source, power to gas, that we produce hydrogen just only from renewable energy. I think we also have a skill set of chemical technologies like the pyrolysis, where we are going to split the natural gas into carbon and hydrogen. The main topic will be that the hydrogen will be produced without CO2 emissions, and therefore I think we should not limit our technological skill set just purely to renewable energies. But on the one hand side, on the other hand, of course, renewable energy. Yeah, go ahead.
I was going to take us on to the chemicals part of your business, because I know Borealis, the deal you did with Borealis recently, takes you more in that direction. Do you plan to keep that as a separate business, to run as a standalone, or to integrate it? And if you integrate it, how long will that take, do you think?
Well, I think Borealis is the chemical business, and we have announced that we see more than 800 million euros of synergies waiting us. And if you would like to go for these synergies, you, of course, have to at least partly integrate Borealis into OMV group, and that's our major intention. This is going to happen next year, and I think we will convince our investors with big growth numbers, and especially we will deliver on these synergies. But OMV and Borealis is also a storyline to prepare for a circular economy. So together with Borealis, we will invest more into recycling of plastic waste into the value chain of chemicals and jet fuels.
We were reporting here at Bloomberg, Rainer, just yesterday that some key shareholders at OMV may be a little unhappy or uncertain about the way that the supervisory board has been supervising strategic decision-making at OMV. Do you think we're going to see changes to the supervisory board with that in mind?
Well, I think this is a question you should address to the shareholders and not to a CEO. All I can say is we have enjoyed a trustful cooperation with our supervisory board, and we prepare ourselves to continue such a relationship with our supervisory board.
And are you happy with the way that your relationship is evolving with the new chairman?
As always, why not? Do you know Mark? He's a great guy.
Well, I'm glad you're getting on so well. That is good to hear. Rainer, thank you so much for your time. Really good to speak to you. The OMV CEO, Rainer Seele, speaking to us about Nord Stream 2 and beyond. Up next on the programme, the EU smashed global records on its first sale of social bonds this month. What has made investors embrace them then? We'll discuss that next. This is Bloomberg.
course it's going to help. Let's assume that they have a rapid testing system that has the efficacy and the reliability that they should have to do that. That should deal with a lot of the concerns that some countries have, but not all.
That was the Emirates President, Tim Clark, of course, speaking to Bloomberg's Manus Cranny. A lot of interest in the aviation sector right now, not least of which, what kind of use can the aviation sector make of rapid testing and of vaccines once they are available? Interesting to hear Tim Clark's thoughts on those. Let's check the markets for you then now. This is what we have for European equity markets. We're moving to the upside on the Stoxx 600. We wobbled a little, but now seem to have refound some positive direction, so up around 0.25% on European stocks. US futures also moving to the upside, up around a couple of tenths of a percent on the E-mini futures and Dow futures, over 30,000 on the Dow, of course, in yesterday's session. Nasdaq futures also up by 0.4%. Now, the European Union smashed global records on its first sale of social bonds last month. Its first two offerings are among the biggest ever. What makes these social bonds so attractive to both investors and to issuers? Let's get into that conversation now, and to bring into that conversation Armin Peter, UBS Global Head of DCM Syndicate. Good to speak to you, Armin. I wonder how surprised you were about the market's appetite for social bonds. How do you give that some context for us? Yeah. Good morning, everyone, and thank you very much, Anna, for having me this morning. Certainly, smashing success for the EU. I would say it was expected that way, because it was well telegraphed, well prepared, very well prepared, actually, to say. And the broader market was really waiting for this transaction to come to the market. Just yesterday, they had the third offering, yet again, very, very successful, 8.5 billion issued on back of a 13 times oversubscribed book. So I'm not worried about any future issuance in that format by the EU. Right. And how are these EU-issued bonds, social bonds so far, others to come in the future? How are they comparing? How is the market rating them and trading them in relation to the bonds that we know much better, that have much more history? It's a good question, and I would say probably the first transaction came slightly cheap because of a little bit of an uncertainty, just sheer the volume that the EU is planning to issue. At the same point in time, I think now very well established. The first transaction or the first two transactions performed very, very well in the secondary market. And I would think probably over time, as the program continues to roll, I can see an outperformance of these transactions versus the conventional offerings. But certainly for now and for the broader green bond market, it is a great benchmark to have. Can I ask you a question that is only partly serious, Armin, and that is, how long is it until all bonds are ESG bonds? And I ask this just as a way of getting into the conversation about how big the sector can become. They start off niche, but then do they become dominant? Is that the way you're looking at this? And how certain can you be that all bonds that are labelled ESG really are at this point? How is that thinking evolving? It's the right point to make, actually. Albeit, I think, to put things in context, it's only a couple of percentage points of the global issuance that we see during a year that the ESG space is covering for the time being. So I think we have a lot more ground to cover in that regards. In terms of greenwashing, certainly is a topic the market is discussing. Regulators are very, very wary of it. But I think at the same point in time, as we are building more and more principles and standards, I think that topic is well covered. And I'm not too worried about greenwashing to be such a big topic in the future. What about the role of the ECB in buying up ESG bonds? Is that something that supports their price? We in many conversations since we first saw quantitative easing undertaken in Europe, we had conversations with buyers of government debt who said, well, look, if the ECB is buying it, or indeed of corporate debt, if the ECB is buying it, this helps. Is it the same in the ESG space? Yeah. I mean, all the QE programs by the ECB are adhering to the same principle. There's no special treatment as such for green bond issuance.
That being said, the ECB is very conscious of the topic, very keen as well to support the broader ESG market and the dynamics that we can see in way of the ESG green bond market as well. And the statement back in September, when they changed their collateral rules to allow SLB transactions to be part of their collateral for their credit operations, I think that certainly is a very big statement by the ECB, and it's certainly a game changer as well for the ESG market. Very supportive.
Yes, there's been a lot of talk about the limits of monetary policy, the limits of what central banks can do in terms of acting on the climate change agenda. Do you see then that we might see policy change from the ECB to make it more attractive to issue green bonds because the ECB is more likely to buy those over others, or would it be premature to make that assumption?
I think the statement in September to actually change their collateral rules and allowing sustainability-linked transaction to be part of collateral, I think that in itself is actually already a statement and a change from what they've done beforehand, because SLB transactions haven't been allowed to as collateral until then. They will be allowed by the 1st of January 2021. So there's a change. And I think it's been very, very clear by Ms. Lagarde in terms of her statements around their perception of green bonds and what it means actually to look at the climate risks, not only for their very own holdings.
When you look at broader debt capital markets, not just the green bonds, Armin, but the broader story, are you concerned as we sit here with virus levels still rising, the vaccine, of course, coming over the horizon, but still some way off? Are you concerned about the level of indebtedness that we have for European businesses at this point?
I think it's normal that everyone gets prepared. It's certainly is a crisis. Level of indebtedness certainly is increasing. At the same point in time, I think previous crises have shown as well that the system overall is able to deal with this. And I'm very certain as well that this time around it will be not different. It will certainly be a time of further volatility ahead of us. But for the time being, I think we have very much proven that we can deal with this crisis very, very well. And I'm very confident as well that will be the future.
Thanks very much, Armin. Really good to speak to you this morning. Thanks for giving us your thoughts. Armin Peter, UBS Global Head of Debt Syndicate. Thanks very much for your time on the subject of ESG bonds. Up next, when will risk assets start to price in inflation? We had that conversation at the start of our programme with Mark Cudmore. We'll put that to another member of the Markets Live team, to Market Live's Christine Aquino. That conversation next. This is Bloomberg. Welcome back to the European Market Open. We are 51 minutes into your European trading session. European equity markets, they're higher, only by 0.1%, though, so not by much. Just the global equity rally stumbling a little bit through the Asian session and into Europe. US futures flat to positive right now. Let's get a Bloomberg Business Flash. Some of the top corporate stories that we're covering here at Bloomberg. HSBC shares are surging today amid growing optimism. Europe's biggest bank will soon resume paying dividends. On Tuesday, Goldman Sachs advised investors to buy HSBC shares. They're up about 50% from a 25-year low at the end of September. Fintech startup Stripe is said to be chasing new funding that could double its valuation. Sources tell Bloomberg the new round could put it at more than $70 billion or even as high as $100 billion. Stripe competes with Square and PayPal and has benefited from the pandemic, sending more shoppers online. Gap is reporting weakness at its namesake brand and Banana Republic, but strength at Old Navy helped sales jump more than expected. The retailer is closing poor-performing stores to focus on its online offerings. The company still isn't providing long-term guidance due to uncertainty created by the pandemic. That is your Bloomberg Business Flash. 52 minutes into the trading session, let's talk to Christine Aquino, who leads our Markets Live team here in Europe. So Nirvana found Goldilocks for stocks, Goldilocks for risk assets, it would seem then over the last 24 hours, Christine. But now we stumble slightly. Are you clear on what we're looking for as the next catalyst for risk assets?
Hey, Anna, I think, the next catalysts are still the ones that we've been waiting for all this time, really. Clarity on the fiscal stimulus path for many countries, including the U.S., the U.K., and Europe, and perhaps a little bit about monetary policy as well, and how those two factors will combine and how that will set the background for 2021, really. And everything else, really, is probably just day-to-day noise. As you mentioned, yesterday was a roaring rally. It's quite natural for a day like today, especially heading into U.S. Thanksgiving when traders take some risk off the table and consolidate those gains.
Yeah, exactly. It won't be a Thanksgiving like many others we've seen, of course, but some similarities might remain, and we might see, of course, some people taking some time out. Let me ask you about inflation. When will risk assets price inflation? I know that's the question you've been asking on the Markets Live blog today. I asked this of Mark Cudmore, your colleague, earlier on, and he was saying, look, for a long time I haven't seen inflation at all, but then I have been reading some more persuasive arguments around inflation recently. What's your thinking?
Yeah, absolutely, Anna. I think, I agree with Mark in that it is difficult for investors to price inflation just because it's an abstract thing that they haven't seen in a long time. Time and time again, we've heard from policymakers actually lamenting the lack of inflation. And so to comprehend the possibility that it might rear its head again is really quite difficult when we haven't seen it for ages. And we've seen bouts of it throughout this year, just as markets made their way through the turmoil that was 2020. And earlier in the summer, we've seen evidence of investors perhaps flocking to things like gold or maybe even Bitcoin as a potential hedge against inflation. The logic behind this, of course, is still up for debate. There are many doubters of both of these assets as a hedge against inflation, but it hasn't stopped some investors for considering it. But largely, though, it is quite difficult for markets because, again, it's not necessarily something that they see front and center. And we all know that the nature of markets is to kind of take a look at what's ahead right now as opposed to what could be transpiring down the road.
Right, yes, and how long that road is, how long the road is that leads to inflation, Christine, I wonder. Let me ask you about the UK briefly. Christine, what are you looking for from the Chancellor, Rishi Sunak, later on today? He's got this spending review. What will matter to markets? The pound was stronger, now a little bit weaker. We've heard some lines around Brexit from Ursula von der Leyen. What are you watching for later on the UK?
Yeah, I think, it would be good to get a sense of what is the government's priority in terms of spending, whether they're largely focusing on addressing the pandemic and its impact on the economy, and how that figures with the UK's general pledge to keep its budget and spending in check, and whether we mention the dreaded austerity word. And yeah, I think particularly it would be important for the gilt markets, and we'll see how that goes.
Lots to watch out for then, Christine. Thank you very much, Christine Aquino from our Markets Live team. Surveillance is up next. This is Bloomberg.
A November to remember for the markets. The Dow crosses 30,000 for the first time. It's far from a quiet Thanksgiving period. Transition troubles at the Treasury. Mnuchin plans to place nearly $500 billion in unspent stimulus cash into an account his successor will need a congressional approval to use. And HSBC's turnaround picks up speed. The bank's shares rise as speculation grows around a return to dividend payments. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacroix here in London. So there is quite a lot going on in the markets. This is mainly because of the threshold, psychological threshold that markets crossed yesterday. So let's have a look at what that means for European stocks. And you can see some of the global stocks rally pausing. We did have the best monthly gain in 3 decades. Investors now awaiting a lot of economic indicators that could support the rally in risk assets. Now, we have these raft of indicators from jobless claims to readings on consumer confidence and, of course, personal income. We did have a gauge of Asia-Pacific shares giving up an earlier 1.1% gain. Treasuries pretty much steady. Crude oil holding above $45 a barrel. And I also wanted to show you Bitcoin, which will do so in a second, because they were also really, within a sliver of a record high for Bitcoin. There it is. You can see it, 19,130. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. France will gradually start easing its lockdown from Saturday. Small stores will be allowed to reopen, and if certain conditions are met, cinemas, theatres and museums will follow suit from December the 15th. But restaurants will remain closed well into January. President Emmanuel Macron says vaccinations could start at the end of December or in early January. Meanwhile, German Chancellor Angela Merkel wants to tighten the country's coronavirus restrictions. It sets the stage for another round of tense talks with regional leaders who have called for more lenient measures. The plan is to extend the partial shutdown until at least December the 20th and bring in new measures for shops and schools in virus hotspots. Now, last night, President-elect Joe Biden officially announced his foreign policy team led by Antony Blinken as Secretary of State. The appointees will work on resetting U.S. relations with a number of allies after 4 tumultuous years under President Donald Trump.
It's a team that will keep our country and our people safe and secure. And it's a team that reflects the fact that America is back, ready to lead the world, not retreat from it. Once again, sit at the head of the table, ready to confront our adversaries and not reject our allies, ready to stand up for our values.
And Treasury Secretary Steven Mnuchin is moving over $450 billion beyond the easy reach of his possible successor, Janet Yellen. He's putting the money, most of which had gone to support the Fed's lending facilities, into a fund that requires congressional approval. Democrats are criticizing the move, with one calling it illegal. The Treasury rejects that analysis. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, another record rally swept through equities yesterday. Progress on a vaccine and a possible peaceful transition, presidential transition, sent stocks soaring, pushing the Dow through 30,000 for the first time. Now, here with a look at, what exactly happened in the equity rally is our Danny Berger. Danny, hi.
Hi, Francine. I feel like it was just yesterday. It was actually 2017. I was at the Dow Jones S&P headquarters in New York, and everyone there was putting on their Dow 20,000 hats. Well, anyone still wearing that hat is looking extremely bearish today. And I want to say one of the remarkable things about this rally we've seen into new records is the amount of volume, the amount of action underneath those headline numbers. More than 26 million shares traded hands over the past 2 days. Now, why is this volume remarkable? Because it's a week for Thanksgiving. It's a holiday week, and usually we see traders disappear from the market, but they haven't yet. In fact, this period, that's 72% higher in terms of volume than we saw at this point last year. So perhaps more of those vaccine headlines, presidential transition, all of that boiling up, all this optimism to the surface, pushing us to new highs, Francine.
Danny, what role have retail traders actually had in this rally?
Well, one of the remarkable things is that retail isn't participating, or it is participating rather, and what they're participating in are sort of some of the more unloved stocks as well. Look, we saw Bank of America Merrill Lynch's online brokerage as well as Vanguard report outages yesterday. Francine, not even the infrastructure can keep up with the exuberance that we've seen. And retail traders have really, generally so, been crushing it. You've seen they've gained 85% so far this year, trouncing the pros, trouncing the hedge funds, doing 60 percentage points better than the S&P 500 so far this year. So it is clear that retail has a big part in this, dare I say, perhaps even leading some of that rally yesterday, especially on a day where we have Bitcoin doing what it does, definitely a retail flair. And that's where we get these record gains in the Dow. Francine?
Thank you so much. Our Danny Berger there with the very latest on some of these equity moves. Now let's get more on the markets with our Mark Cudmore. He's our Bloomberg MLive managing editor in Singapore. Mark, underlying this, is there a danger that there's going to be a policy mistake around the corner? Like, what do you do with inflation in this kind of environment?
So I think that the inflation threat for next year is a very real one. And I think that the fact that this rally has been built on the fact that we're going to have deeply negative real yields for a very long time to come, and that if we get an inflation spike, that rates might jump up a chunk next year. And while they might stay negative in real terms, we're still going to have to change our forward discounting models of future cash flows, and that's going to change some of the equations on some of these equity decisions, and therefore make it a harder investment environment. I'm much more worried about the short term, though. While we've seen this euphoria around general kind of risk assets, we've seen this surge in global stocks. It is interesting that, you know, the S&P 500 didn't break its Pfizer vaccine high from 2.5 weeks ago, despite the fact that we've had wave after wave of kind of new good vaccine news. We've had more political certainty in the US. We've generally had a lot of good news and euphoria elsewhere. And yet, E-mini futures haven't broken that high. The S&P cash market didn't break that intraday high either. And I think now we've just seen some slightly more worrying price action just filter into Asia in today's session as well, where Asian stocks all surged to a record again and then suddenly kind of drifted off into the close. So I think that's interesting, given that we know we're expecting a massive month-end rebalancing that's going to be stock selling over the next few days, and that's meant to be a low liquidity environment, though as Danny pointed out, it hasn't been low liquidity so far.
So Mark, what are you telling me? That, you know, we could see a correction because actually there's not enough fundamentals to support this rally?
I think that the next few days are worrying. It doesn't necessarily mean there's going to be some big collapse. This is not something about like, oh, the market's going to swoon massively. We're expecting tens of billions of stock selling in the next 4 or 5 days on a rebalancing in U.S. stocks at a time when the price action hasn't been particularly exuberant. Despite several vaccine announcements, we've not broken the intraday high that was made on November 9th. And that's despite the fact the rest of the world is warming. So already the price action in U.S. stocks are slightly worrying. Now we know we've got just structural selling, which is just rebalancing. We've got the idea that there's meant to be a holiday here. We know that the virus numbers continue to get worse. We're getting the story overnight that millions of U.S. homeowners are expected to get evicted by the end of the year at the exact same time that they're expecting to lose their unemployment benefits. So therefore, it's not looking great for U.S. stocks in the short term. Now, I don't know how dramatic this is going to get, but I would say that over the next week, I think it's more like a downside move is much more likely than a further upside move.
And is that when risk assets price inflation, or will that be a 2021 story, Mark?
I think the inflation story is definitely a 2021 story. I think that's partially it's going to be base effects from some of the impacts of this year. Secondary, it's going to be some of the stimulus packages that will kind of come through from the U.S. that will help some of the commodities component. But I think that we will kind of see that inflation threat come into at least a certain extent next year, partially just because we've had nothing there for so long. But I'm not worried about inflation this side of Christmas.
Mark, in the shorter term, what are you expecting on stimulus? What are the kind of pressure points that we could see? Is it data today? Is it something else?
Well, I think if we do get some kind of stocks correction, and there's a risk given the complacency that's been out there, the fact that investors are only focused on the top side, there's a chance that it could get a little bit messy in the short term. And that would, of course, raise the pressure on there being extra stimulus. The other thing to watch about the stimulus argument is that I think that investors are very much complacent around the idea that whatever the final Senate composition in the U.S. will be, that it will support a very large stimulus package in the U.S. And yet, whatever the final Senate composition will be, it will also stop Biden imposing some of his tax and regulatory plans that are meant to be more negative for stocks. And I think there's a slight kind of dichotomy here between how investors are thinking about these two issues that both hinge on the same thing. What is the final composition of the Senate? So I think that the stimulus argument, the stimulus debate is going to stay interesting. We obviously want to watch what's going on in Georgia. But I think what's going to raise it back to the front of the radar again, probably seeing markets having another swoon in the next couple of weeks.
Mark, thank you so much. Mark Cudmore, Bloomberg and Live Managing Editor. Now, coming up, don't miss our interview with the European Central Bank Vice President. He's Luis de Guindos. You can catch that at 12:30 p.m. London time right here on Bloomberg. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Dès samedi prochain matin,
from Saturday morning, several changes will become reality.
Enfin, et je sais combien
I know to what extent the wait has been long and how much this contributes to our daily lives, our city centers, town centers, and so therefore, all shops can reopen and home service can restart, but within a strict health protocol.
That was the French President Emmanuel Macron announcing a gradual easing of lockdown before Christmas. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Airline industry group IATA is warning losses could mount over $150 billion this year and next. That is almost 60% more than it predicted back in June. It sees vaccination programs taking time to revive travel demand. Emirates President Tim Clark says rapid testing will only deal with some of the concerns about travel.
Of course it's going to help. Let's assume that they have a rapid testing system that has the efficacy and the reliability that they should have to do that. That should deal with a lot of the concerns that some countries have, but not all.
Now, fintech startup Stripe is said to be chasing new funding that could double its valuation. Sources tell Bloomberg the new round could put it at more than $70 billion or even as high as $100 billion. Stripe competes with Square and PayPal and has benefited from the pandemic, sending more shoppers online. And finally, Bitcoin mania is back. Retail traders are piling into the cryptocurrency, driving prices back towards all-time highs. It's now up more than 40% in November alone to levels not seen since 2017. And the frenzy is spreading to other coins, with Dash and Bitcoin Cash both jumping. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now let's take a look at what's coming up today. At 9:30 a.m. UK time, the ECB publishes its financial stability review, giving us a readout on the mountain of corporate debt brought on by the pandemic. In the UK, the Chancellor Rishi Sunak will also unveil the government's spending plans for the next year, including £4.3 billion to help get the unemployed back to work. Over in the US, a day packed with economic data, including a second reading of third quarter GDP. Now let's get back to airlines, and South Africa's finance minister has once again questioned the need for the country's troubled state-owned carrier. South African Airways has been in bankruptcy protection for almost a year and hasn't flown a commercial flight since the start of the country's coronavirus lockdown in March. Well, Manus Cranney spoke to Tito Mboweni about his doubts and whether it undermines the 10.5 billion rand bailout he agreed to less than a month ago.
Do we need airlines in the markets to operate? They don't have to be national, but they can be business enterprises that function. My view is that look at British Airways, look at airlines in Ireland, look at airlines anywhere else. Don't compare us to the Emirates, which is funded by windfall profits from oil companies and so on. Don't look at that. And in South Africa, the market is going to clear. And if that market clears with the participation of a restructured South African Airways, so be it.
I was in Joburg and Cape Town last year. I was asking the question of the president, the Eskom debt. I speak to you a year later, it's 484 billion. We've talked and talked and talked. Minister, how and what exactly is the plan to deal with Eskom's debt?
Well, there are a number of issues which are about the Eskom debt. First of all, not all the bonds are redeemable on the same day. Some of them are of long maturities, medium maturities, and so on. So don't look at the number that says maybe about 400 billion or so and think that
484 billion, Minister, 484 billion.
Yeah, so it's not going to fall due tomorrow. It's spread out over a number of years. The key issue is when a particular bond matures, what is going to be done to redeem it. And most of the bonds actually are held by the Public Investment Corporation and the banks and so on. And I think the ESCOM Treasury is working on this matter together with the National Treasury of the Republic of South Africa to make sure that you smooth out the bonds as they mature.
Well, that was the South African Finance Minister, Tito Mboweni, speaking to Hermanus Cranny. Now, coming up, a bet on dividends. Shares in HSBC have surged some 50% from their 25-year low at the end of September. We'll focus on dividends, and we'll focus on Europe's banking sector next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, HSBC shares gaining in London this morning on optimism that Europe's biggest lender may soon resume paying dividends. The bank's stock has surged 5% in 5 days and more than 40% from its September low. Meanwhile, the ECB official Yves Mersch told the FT that Eurozone banks may be able to resume dividend payments next year if their balance sheets are strong enough? Well, let's get straight to the banking sector with our Jonathan Tice, Senior Banks Analyst at Bloomberg Intelligence. Jonathan, thank you so much for coming on. Is HSBC a one-off, or are we actually expecting the European banking sector to follow suit?
HSBC is definitely not a one-off. It's a special case because they have a very large Hong Kong retail shareholder base that destroyed the share price when the PRA told the bank that they couldn't pay dividends. And actually, when we think about kind of the sector and capital return, HSBC certainly isn't one of the names that would immediately spring to mind as a way of playing the capital return being switched on. So, yes, we think the ECB, for those banks that are strong enough, with decent capital and profitability, it's not just about capital and returning, it's also about sort of decent business plan and returning to profitability next year. They will be allowed, up to a point, probably with a sort of payout ratio limit, to begin to return capital.
Jonathan, the ECB also, we understand, or reportedly signaling that it could lift the dividend ban soon. What do we know about that?
Well, when we get some updated guidance on December the 10th, we're expecting the ECB to say thereafter that, again, more on a case-by-case basis and definitely in conjunction with the domestic regulator, banks that tick certain boxes will be allowed to resume capital return. So there we're thinking things like KBC, very interesting capital return story, DNB, very profitable. Lloyds in the UK is running a very large capital position right now, and I think if the ECB does it, the Swiss will probably do it. The Swedish are being quite cautious, but I can't really see how the PRA can say no. So I think you're probably going to get a sort of cautious return to capital return on a case-by-case basis. So don't expect the weakest banks to take advantage of capital relief that we've had over the past few months to start returning capital. But for the stronger franchises, absolutely.
Jonathan, overall, is there a danger that actually we're going to see default and bad loans, mature next year, as there's a lagging time with what we're living in 2020? And so is it a bit dangerous to resume dividends?
Well, not really, because we know about all of this. I mean, the banks have been talking and they've been taking provisions for the new IFRS 9 standards for stage 2 and stage 3 loans, which is when things do begin to get bad already. So none of that will be a surprise. One question will be, the extra stimulus, will it be enough to sort of stop a very vicious spike in bad loans in 1Q and 2Q of next year? Because the last thing the regulator wants is to have got it wrong, the banks not have set aside enough, and then have to tell them to switch it back off again. And I would suggest that they're going to sort of stay looser for longer in terms of, we'll focus on transitional, we'll help you, we'll give you all the support we can. So for the strongest franchises, I think it's unlikely that that gets derailed. But as I say, there will be plenty of banks that are vaguely break-even this year that will be told, we don't want you returning capital yet. So this isn't a free-for-all, everybody switches on the dividends. This is the strongest franchises.
Yeah. Yeah, thank you, Jonathan. Jonathan Tyson. We did speak to Anna Butin just last week, actually, who's really asking for a return to dividend. He's a senior bank analyst at Bloomberg Intelligence. Now, coming up, we'll have plenty more about climate change and, of course, transitioning the economy, aiming for net zero. Europe's largest gas pipeline company says it wants to hit zero net carbon emissions by 2040. Our interview with the chief executive of SNAM is coming up next. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, there's a lot going on in the markets. Yesterday, that psychological threshold of 30,000 on the Dow definitely means that the focus is firmly on the markets. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK is relaxing coronavirus restrictions over Christmas, allowing up to 3 households to meet indoors. The so-called Christmas bubble will last from December the 23rd to the 27th. Still, Prime Minister Boris Johnson is urging people to be cautious, saying the virus doesn't know it's Christmas. Doctors are already raising concerns this will lead to even more infections. Now, the dose of the Oxford AstraZeneca vaccine that showed the highest level of effectiveness was tested in younger people. That's according to the head of the US vaccine program, giving an initial half dose before the full dose was 90% effective. But the age of the group was capped at 55. A wider trial with 2 full doses was only 62% effective. The EU's top diplomat is warning about the possibility of tougher sanctions on Turkey. That's over renewed tensions in the eastern Mediterranean between Turkey and Cyprus. The EU's foreign policy chief says the bloc's leaders will tackle the issue at their upcoming December meeting. And Hong Kong's leader Carrie Lam is vowing to continue strengthening ties with China. She used her annual policy speech to defend Beijing's tightening grip on the financial hub. Lam says her aim is to restore confidence following another tumultuous year. One of her key economic policies is to scrap stamp duty on commercial properties. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. We're just getting some news out of the European Central Bank. This is the Financial Stability Review. The ECB saying banks might have to set aside more bad loan provisions. This comes on the back, of course, of what we heard also about the health of the financial sector. We were just talking to our Jonathan Tice about that. The ECB also saying that rising debt levels create risks in the longer term. Now, this is something that we've been watching out for very closely, but of course the timeline is extremely important because we could see defaults into next year as we have a vaccine and maybe there's less fiscal support. Don't miss our interview. That's on the Financial Stability Report with the European Central Bank Vice President. He's Luis de Guindos, and you can catch that at 12:30 p.m. London time right here on Bloomberg TV. Now, let's turn to the future of Europe's largest gas pipeline company. Snam has today set an ambitious goal to reach net zero emissions by 2040. The Italian company says it will invest 7.4 billion euros in development and energy transition, 1 billion more than in previous plans. Now, Snam estimates 600,000 tons of carbon dioxide equivalent will be avoided as a result of the investment. Well, joining us this morning is Marco Alvera. He's the chief executive of Snam. Marco, as always, thank you so much for coming on. So you've just unveiled this plan, and I know you've really been one of the first adopters and one of the first people that care about climate change and the transition. Is COVID an opportunity to do some of these things more quickly than you had thought 12 months ago?
Thank you, Francine. It's good to see you. Yes, indeed, COVID has really accelerated not only the technology curve in general, but also the pace at which countries and companies are adopting finally concrete net zero targets. We've announced ours today. We think it's the first in the oil and gas industry to get there 10 years ahead of Europe by 2040. But in general, as countries commit to net zero, this really changes the landscape and triggers what we call a net zero super cycle that could reach $100 to $150 trillion of investments. So it's a huge, huge challenge. It's probably the biggest challenge of our generation to get to net zero. There's a lot of hurdles, but there's also opportunity for people like us who want to invest in the super cycle.
Marco, how do you intend to get there?
So we intend to get to net zero by reducing our own methane emissions very significantly. We intend to cut by half our CO2 equivalent emissions already by 2030. We are the first in the world to invest in dual fuel stations so that our stations that are now burning natural gas will be able to use electricity as well. So it's the equivalent of building thousands of electric hybrid cars, but in industry. And we see this as a trend that will span into industry. The future is a hybrid model where molecules and electrons work together.
I know you've been very big on hydrogen. You've written a book on hydrogen. You also you've written several books on hydrogen. But how much will hydrogen make part of our energy demand in Europe in 2025, in 2030, and then 2050?
So 25, negligible. 2030 in Italy, around 2%. That's the strategy that came out. I think that's true for most of Europe. The important thing is to look at 2050. When we get to that fully decarbonized outlook, green gases and hydrogen will account for about 25% of the global energy mix. That's a big number. We're starting essentially from scratch. The good news is that we can use the existing natural gas infrastructure where they are available.
Give me a sense of what happens to biomethane. So I don't know if you're just as bullish on biomethane. It just takes longer than hydrogen, or it's just different, different kind of markets.
It's a different market because biomethane is solving a problem. Biomethane is addressing the problem of waste, of food waste, of urban waste, of agricultural waste. So it's a neat way of turning waste into completely renewable energy. And biomethane will grow to the extent that we have waste. I think all of the agricultural waste will turn into biomethane. But as the cost of hydrogen falls, the hydrogen made from solar and wind will be cheaper than biomethane. And so biomethane is driven by the amount of waste we have and solves that problem. Hydrogen is really a way of bringing solar energy, wind energy, hydro energy into our homes, our trucks, our factories, and our power plants.
Could you give me a sense, Marco, on hydrogen, the demand for it in Europe? You talked, I think, about Italian numbers. Are they reflective of what could happen at European level?
Europe has set some very ambitious goals. So we think that globally, in Europe and in Italy, the long-term potential for hydrogen is between 20 and 25% of the primary energy mix. Today, 75% of that mix is made up of oil, coal, and natural gas. Those fossil molecules will be transformed into green molecules, with hydrogen making up about 25%. Electricity will make up around 50%, and the other 25% will be biofuels, biomethane, and synthetic molecules.
Marco, how are you expecting the overall gas market to perform in 2021 in Europe? Are we going to see a big pickup because of a pickup in activity after the lockdowns of 2020?
The energy markets are rebounding. We saw oil yesterday. Gas is doing well. Prices are up. Demand is up. Gas has a benefit compared to oil because if we look at the cost abatement curve, it's really cheap. It's in fact cheaper now to drive a natural gas truck than a diesel truck in most countries in the world. So we're very bullish on gas demand in 2021 and in the medium to long term. And then over the very long term, natural gas itself will be replaced by hydrogen. But until 2030, 2040, there's a very robust demand growth from using gas in heavy transport.
Are we going to see consolidation in your industry? Some of your peers have been pretty acquisitive. What does it mean for Snam?
We've been focused on buying small companies and bolt-on acquisitions. We now have 4 startups that started from scratch and are now very well positioned. And we've announced this morning we target over 150 million of EBITDA in 2024 just from the startups. So we don't like big acquisitions. We think in the utility space, there's not a lot of synergies because the assets are where they are. And when you add assets, if you have the headquarters, there's not a lot of synergies. So I don't see a lot of consolidation. What I do see is a lot more collaboration. I've heard big utilities use the word major, use the word partnership yesterday. I think the model we're going towards is a model where the utilities will look a lot more like the oil companies, where there's a greater degree of partnership and collaboration in the industry. As I said, the challenge is huge, and we need to join forces to get there.
And maybe a final question on LNG. How does LNG perform in 2021 compared to piped gas?
I think LNG is going very strong. I think Asia is very thirsty for LNG. I think big countries that we talk to and that we work in, like China and India, as they look at their import balance, they notice that importing LNG is now cheaper than importing diesel. So as I mentioned, a big opportunity to switch from diesel to LNG when it comes to heavy transport.
Marco, thank you so much, as always, for joining us. Marco Alverà, the Chief Executive of SNAM. And Marco, actually, I wanted to show everyone the book that you did for kids, but I think it's in the LACWA library. I can't find it, but I know it's a great cartoon explaining kids what renewables actually mean. Coming up, the head of the International Airlines Lobby Group says despite vaccine optimism, it's going to be a while until travel demand reaches its previous altitude. So our interview is a little bit later this hour. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. HSBC shares are surging today amid growing optimism. Europe's biggest bank will soon resume paying dividends. On Tuesday, Goldman Sachs advised investors to buy HSBC shares. They're up about 50% from a 25-year low at the end of September. Dell and HP are both getting a boost from the pandemic. They've reported quarterly results that topped estimates, lifted by customers upgrading their computers to work from home. home. Dow shares climbed nearly 3% over the 3 months, with HP shipping a record 19 million PCs over the same period. And Gap is reporting weakness at its namesake brand and Banana Republic, but strength at Old Navy helped sales jump more than expected. The retailer is closing poor-performing stores to focus on its online offerings. The company still isn't providing long-term guidance due to uncertainty created by the coronavirus pandemic. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, Treasury Secretary Steve Mnuchin plans to move $455 billion in unspent stimulus into an account his successor will need congressional approval to use. That may mean a tricky start for Janet Yellen, Biden's presumed pick for the job. Here are some of the former Fed chair's comments on fiscal support and policy from over the years.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. I strongly believe central banks need to be independent and need to do everything they can.
I do see the sentiment and the push is now going very much in the direction of deregulation, reducing buffers, reducing authorities, and I am worried about where this is going. Appropriately designed tax reform could have a favorable effect on productivity. Of course, it obviously depends on the details of what you do.
We need public policy oriented toward making a big difference on climate change. A very efficient way to price carbon would be to go to the mine head, the well, where energy that creates carbon emissions enters the economy, and to simply levy a tax.
While the tariffs may make goods more competitive, the appreciation of the currency will offset that. So I regarded that as not the proper focus. But let me be clear, I do think the United States has real issues in terms of its trade relations with China.
All right, so a roundup of some of the things that Janet Yellen had said over the last 12 months. Joining us now to discuss, of course, the latest in D.C., our senior writer, Stephanie Baker. Stephanie, great to have you on the program, as always. What is Steve Mnuchin actually trying to achieve with this latest move?
You know, he's saying that it's legally mandated under the CARES Act, you know, that the money expires and it should be returned. You know, Democrats have rejected that, saying, you know, essentially that it is yet another move by the outgoing Trump administration to box Biden in and limit his ability to maneuver. And it's kind of incredible that it's happening at this point when there's such desperate need for a new fiscal package, stimulus package to deal with the economic fallout from the coronavirus pandemic. You know, desperate need for money to be injected into the economy to help struggling businesses, unemployed.
Okay, guys, I'm placing an order to sell short Canadian dollar. Price I'm looking to sell at 131.08. Okay. Okay, order placed to sell short Canadian dollar.
You know, to work incredibly hard to try to, you know, pull together different sides to come up with, you know, a comprehensive package to get the economy back on track. You know, she is incredibly experienced. You know, I think she had some degree of bipartisan support, so that hopefully that will help her. But the challenge facing her is enormous.
What's the latest on President-elect Biden's cabinet picks?
Yeah, I mean, he has focused on foreign policy and national security with the first crop of nominations, and it's an incredibly diverse group, very experienced. You know, some people, you know, have called it, you know, that they're dominated by career, you know, politicians, but you know, really a huge depth of experience across the board. a good range of, women, first in various posts, including Yellen, as well as a diverse, diverse range of candidates, including the first immigrant, a Cuban American, to run Homeland Security, who will be in charge of immigration policy, which I think is a really strong signal, as to where Biden is going. And I think the overall message from his crop of nominees is that, America will be, pursuing a sort of coalition building on the international stage, that Trump's policy of America first is firmly behind us, and that the U.S. will pursue kind of united international front on a range of global challenges, from climate change to Iran to China. I think it's a real sign of this sort of change of tack that Biden will take internationally.
Stephanie, thanks so much. Our Stephanie Baker there with the very latest on the U.S. transition. Now, coming up, the head of the International Airlines Lobby Group says despite vaccine optimism, it's going to be a while until travel demand reaches its previous altitude. Our interview is next. This is Bloomberg.
It moved too fast, too far, as you can see, so I have to remove order to sell short. Let's see what's going to happen next with Canadian dollar. In the meantime, I'm keeping an eye on euro. So let's see what's going to happen.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
We were put on the UK list of countries that didn't have to quarantine when they arrived, and that triggered an enormous increase in the velocity of bookings, particularly from the middle of December onwards through Christmas and New Year, in all cabins. And that's not to say that everybody. Business class is very strong, but don't forget, our business class is a little bit of a misnomer, in the sense that it assumes that everybody who's in our business class back cabin is traveling on business. Well, they're not. And there is an awful lot of business and multiple segments which are not business related that occupy our business class cabins. And at the moment in the holiday period, they are primarily leisure.
I am booked, Sir Tim, don't worry. But if we take it in terms of benchmarks, you had 11 daily flights to 3 airports back in March 2019. When do you see getting back to that kind of level?
We want to get back, if you're talking about the United Kingdom market, by the end of next year, to all the flights that we had in place, the Stansted, the Newcastle, Glasgow, Manchester, Gatwick, Heathrow, Birmingham, all of those we intend to put back.
Any other corridors, any other bubbles in the pipeline?
Not that I'm aware of, but we just wait and see what happens.
Space is the premium. Space and the space around me is the premium. Is next year the year that you really have got to deliver a premium economy cabin? Are those plans afoot, or where are we with that?
Well, we are receiving our first 380 later on in December, which has the premium economy cabin. This was already planned. The whole process of getting premium economy launched, executed throughout the fleet, and the network was put on ice, of course, because of what happened. We will restart that during the course of 21.
And what sort of scale can you get to on that? You've got two A380s coming before the end of the year.
Yes, actually 3.
Excuse me.
Yeah.
What's the ambition on premium economy in 2021?
Well, I would say that we'd have to get to a critical mass of aircraft that we can make a meaningful use of those. But I would say by the middle of next year, we will roll it out and hopefully start it on certain routes by the end of next year.
You talk about business class being full with lots of different types of people, and I get that. I was reading Bill Gates. He said, look, post-COVID, we're going to see at least a 50% evaporation in real business class, i.e., I've got to do a meeting, I've got to do a schedule. That kind of business class is going to drop precipitously. Do you share that perhaps evaporation view? What's your worst case scenario on that kind of business?
Well, I do not share that view at all. And I think I'm on record as saying that it is likely that as a result of what has happened, that business will actually increase. And all the segments will return with greater volumes than we've experienced before. So no, I'm not in that school at all.
Well, that was the Emirates President Tim Clark on the way forward for the airline industry. Now, yesterday was a big day on the markets, the Dow crossing that, of course, 30,000 threshold, and that is quite a big deal psychologically. Now, global stocks, the rally is actually easing somewhat. If you look at Europe, they're down a touch. Again, investors are waiting a lot of economic indicators that could support the rally in risk assets or not. We have jobless claims. We also have readings on consumer confidence and personal income. I'm also looking at Bitcoin. We'll have plenty more from Bitcoin shortly. And then later on, our conversation with the ECB Vice President, Luis de Guindos. This is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
A November to remember for the markets. The Dow crosses 30,000 for the first time. It's far from a quiet Thanksgiving period. Transition troubles at the Treasury. Mnuchin plans to place nearly $500 billion in unspent stimulus cash into an account his successor will need congressional approval to use. And HSBC's turnaround picks up speed. The bank's shares rise as speculation grows around a return to dividend payments. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Tom, we look at the markets. We also look at what the ECB put out in its financial stability report just moments ago, and we have an interview with Luis de Guindos, the vice president, in about an hour from now. And the focus really is on bad loans and the fact that he warned of more bad loan provisions going forward. And so there's a whole question about dividends in 2021.
There's only one story in America away from a horrific pandemic and moving into the Thanksgiving holiday, Francine, and that is Dow 30,000. There is a shocking quiet across the gloom crew. They have been wrong. We'll reassess on that. We start really strong with James Bevan here in a moment.
Yeah, and we have a lot of economic data that could support the rally or not a little bit later. I think I'm looking at private consumption and, of course, a number of other things that we need to watch out for. Now, let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, Joe Biden wants to change the White House slogan from America First to America is Back. The president-elect introduced the team of foreign policy experts he plans to nominate. Biden's goal is to restore U.S. ties with international organizations that President Trump spurned over the last 4 years. And President Trump heads today to Pennsylvania in his campaign to overturn election results there. He'll meet with state Republican lawmakers examining accusations of voting impropriety. Pennsylvania has already certified that Joe Biden won the election. Trump supporters complain that observers were not allowed to be close to workers counting votes. U.S. health officials are working on guidance to shorten the 14-day quarantine period if they are exposed to the coronavirus. Officials are starting to see more evidence that suggests people could spend less time in quarantine as long as they test negative for the virus. Shortening quarantine times could mean more people comply. In Hong Kong, Chief Executive Carrie Lam has vowed to keep strengthening ties with China. Lam used an annual policy address to defend Beijing's tightening grip over the city. She also announced new steps to boost economic links with the mainland. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. A momentous day yesterday. There's no question about that. You see it with the Dow. You see it with other indices, particularly the banks coming on so strongly. Let's go right now to, well, a gentleman with a data check.
Is that you, Tom, the gentleman with the data check, or is it the gentlewoman with the data check?
Let me jump in. The stock market, Dow Jones Industrial Average just hit 30,000, which is the highest in history. We've never broken 30,000, and that's just despite everything that's taken place with the pandemic. I'm very thrilled with what's happened on the vaccine front. That's been absolutely incredible. It's nothing like that has ever happened medically, and I think people are acknowledging that, and it's having a big effect. But the stock market's just broken 30,000. Never been broken, that number. That's a sacred number, 30,000. Nobody thought they'd ever see it. That's the 9th time since the beginning of 2020, and it's the 48th time that we've broken records during the Trump administration. And I just want to congratulate all the people within the administration that work so hard. And most importantly, I want to congratulate the people of our country, because there are no people like you. Thank you very much, everybody. Thank you.
A short visit by the president yesterday. Of course, throughout his administration, it has been linked. He has linked himself to the equity market. Let's link ourselves to the data check right now. Equities, bonds, currencies, commodities. Really interesting out there. I'm going to call it an ebb. Green and red on the screen. NASDAQ 100 elevates. The rest fractionally negative. VIX 21.82. Worth watching the VIX today. It's been an eventful 2 days so far. This week again, America off tomorrow. Huge amount of economic data coming out today. Dollar weaker, 92.12 on DXY. We had a 91 handle earlier. Yen 104.37 really doesn't play. And I really want to point out Brent crude. When are we going to get a 50 print on global oil? 48.47. Francine?
Yeah, Tom, global stocks are pausing some of their rally, and you're right. We have a lot of U.S. economic data, jobless claims, consumer confidence, personal income, and they're due before the market closes and traders head off for the Thanksgiving holiday tomorrow. Overall, if you look at the European stocks 600, they're actually down a touch. Cyclicals, such as mining and energy firms, are actually falling, offsetting advances in defense, including utility shares. And then I wanted to show you Bitcoin, Tom, because it has been quite significant. 19,226. And so we'll talk a little bit about what also that means for the rest of the asset classes. Now, to talk about Dow at 30,000, joining us is James Bevan. He's CCLA Investment Management Chief Investment Officer. James, Tom is right. Everyone who didn't believe in stock markets is wrong for the moment. But in the short term, there are so many questions left unanswered. Bad loans, unemployed, exactly what will happen to the economy. Can the rally be sustained?
I think there will be a pause for breath, but certainly I think that on a 12-month view, equities have materially further to run. If you wanted some point forecasts to prod me with in due course, I'd say that the S&P 500 can get to 3,800 points by the middle of the year next year, and 4,000 or 4,100 points by the end of next year. And that's based on what I'm projecting for corporate earnings per share, where the outlook is increasingly rosy, and the expectation, interestingly, that there'll be a modest compression of the price that investors are prepared to pay to participate in future profits growth. And underpinning all of this, of course, is the expectation that bond yields will stay low, that the Federal Reserve will remain accommodative, and Mr. Biden will spend some more money.
What if we don't get stimulus, James? What if you don't get stimulus in the U.S., and what if we see the whites of inflation 2021?
Well, there are two sorts of stimulus that we should think about. The first is whether or not we get further fiscal stimulus. And of course, we've not spent all of the money that was allocated in the CARES Act, passed into law by Team Trump on the 27th of March. That was $2.2 trillion, and not all of that has gone. And indeed, a lot of that money has ended up on household balance sheets where savings rates have risen. So it only actually requires the consumer to open their wallet, spend more in 2021, see a positive tailwind for corporate earnings per share. There is then the issue of what happens with the Federal Reserve. I would suggest the Federal Reserve are likely to remain keen to remain easy because inflation does remain low for now. I absolutely accept that it will increase in due course, but for now, the Fed is exhibiting all of the signs that it is still caring about bond yields, and therefore by extension, equity prices.
James, it is most interesting, and Mr. Lane of the ECB is out talking about the natural rate of interest. How do equity investors adapt to businesses moving forward, like McCormick's takeout of a hot sauce company yesterday, like blue chip stocks stunning everyone, this great bull market within the timeline of low interest rates? We're all having a terrible job resetting, aren't we?
Well, I think that an awful lot of people have determined that the correct valuation for equities are price earnings multiples. And if you were to look at price earnings multiples for equities now against history, equities are undeniably expensive. However, I would suggest that in a climate of low inflation and low interest rates, we should be looking at the so-called equity risk premium. Now, I am calculating this on the basis of the return that equities will deliver by totting up the future earnings and discounting those back to today's price. And then the equity risk premium is the discount rate less the risk-free rate. Now, on my numbers, the equity risk premium in the States is just over 7 percentage points. I think that based on current lead indicators and credit spreads, the fair equity risk premium is just over 5 percentage points, meaning that there's plenty of upside potential for equities relative to bonds.
So is it I have a joke in my script, James Bevan, about getting out the Dow 40,000. That log extrapolation is Christmas of 2023. Okay, great. Are you extrapolating out this great bull market?
Tom, I'm looking at two key variables. First of all, what is it that companies will make in terms of corporate earnings? And secondly, what price will investors be prepared to own those future profits? Now, on the earnings growth, I would say that the opportunity to positively surprise in 2021 is absolutely there, because the year-on-year comparisons are going to be oh so easy, and companies are clearly now relatively well positioned. And I think there will be a squeeze in a number of sectors. You were talking earlier about the oil price. When I look at what's happened to the supply side of the energy continuum, I wouldn't be at all surprised if we saw Brent crude getting $60 next year at some point. The second issue then is, what price should we pay to be in the market? Now, joining the dots, I think that we will end up at around 20 times next year's earnings. And that's why I get to 4,000 or 4,100 points for the S&P 500 for the end of next year.
But James, when do corporations start, paying more tax to pay for debt?
Well, it's very interesting, isn't it? Team Biden obviously talks a lot about needing to have higher taxes, and I would be very surprised if he hiked taxes in 2021 just as companies are getting back on their feet. So I think that next year is a year of continued relatively easy taxes, but continued fiscal expansion. The Fed has very low requirements to fund government debt because, of course, government has got ahead of itself in terms of its funding schedule. So I do think that Mr. Biden can spend more money without raising taxes in 2021, and indeed without tapping the bond market substantially.
All right, James, thank you so much. We'll get back to James Bevan, CCLA Investment Management Chief Investment Officer. Now, up next, we speak with Marcel Levy. He'll, of course, have a couple of things to say about the markets. He's UCLH Chief Executive. We'll focus on COVID-19 and maybe the difference that 6 months have made in vaccines and treatments. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keane in New York. Now, we have to get you a virus update, and Tom and I have been delighted to be speaking to chief executives of hospital who, of course, have to live this every day. The UK, we understand, is easing coronavirus restrictions over Christmas. That's part of Prime Minister Boris Johnson's bid to balance economic and safety concerns. Now, the UK's 4-week lockdown is set to be replaced on December the 2nd with a regional 3-tier system of restrictions. Well, joining us now from really person who's on the ground and deals with it day in, day out is Marcel Levy. He's University College London Hospital's chief executive. Dr. Levy, thank you for joining us here on Bloomberg so we understand a little bit better about the situation that you live every day. What can you tell us about hospitals in London at the moment? Have they reached capacity? Are you better at treating COVID-19? Is it less deadly than it was in April and March?
Yeah, those are all very relevant questions. I think it's fair to say that almost all hospitals in London are very full, but they're not only full with COVID-19 patients, we're also very full because we are running a complete elective program. We're seeing lots of outpatients. We're doing our surgical program full speed because we have long waiting lists and we want to get on top of those. So that's creating a lot of pressure in hospitals. Because we also have increasing numbers of COVID-19 patients, both in the ward and in ITUs. But I have to say, at the moment in London, it is manageable. So the numbers do increase every day. So we do have admissions every day, but we also discharge a lot of patients back home who have recovered from COVID-19, from ITU or from the general wards. And that's a little bit of a difference from the first week. We have the impression that we have become a little bit better in managing COVID-19. So the length of stay is shorter. Patients' outcome is slightly better, as it seems. And therefore, we can still provide sufficient capacity for everything that we want to do in London.
And is that, Dr. Levy, because of better treatments, better drugs that have been approved, or is it because staff also have better equipment to deal with?
I think it's a combination of things. Obviously, there is no golden bullet for COVID-19 treatment so far, but it's a combination of a lot of little things. So we give steroids to patients. We now know how to anticoagulate them to prevent thrombotic complications. I think, like every medical intervention, we've had our learning curve, so we are better in diagnostics, understanding a little bit earlier on in the process what's going on with patients and how we should respond to that. So it is a combination of things that actually had quite an impressive effect, not only in London. I think that's what you see worldwide. So if you look at the clinical trials, interestingly, we have many trials that do not show any benefit of any given intervention. But if you look in the control group, mortality is getting lower and lower and lower throughout the world. So I think it's fair to say that we're getting a little bit better in treating COVID-19.
Dr. Levy, Tom Keane in New York, thank you so much for joining us, and congratulations on being Chief Scientific Officer of your Netherlands, I believe, into next year. I'd like to speak to you about your focus on thrombosis. We've been looking at the tissue damage that is seen within this horrific virus. Do you believe there is a permanence to those that were sick or sort of sick or very sick? Is there a permanence to their lung capacity and their upper body ability into the future?
It seems to be the case, although there is a strange discrepancy that those patients who are most severely ill recover fairly well after their even a prolonged ITU or hospital stay. We see this long COVID syndrome, so these long-term consequences of COVID, mostly in younger patients that had not even hospital admission and had the disease at home in relatively mild conditions. But then they have this very puzzling and intriguing, but also very debilitating long COVID syndrome that can actually plague them for months.
Within the long COVID syndrome, what is the Levy timeline into 2021? We get all excited about vaccines and the silver bullet. What is your personal timeline to where our viewers and listeners will actually be comfortable in society?
Yeah, I think we are learning really fast. So, of course, all the attention has been devoted in the past few months on vaccines and vaccination. I think we will get there. Now, long COVID is relatively new, so we are very rapidly learning what's actually the underlying reason for those things. And it's probably not one disease, it's a combination of things with different presentations in different people. And at the same time, we are learning how to treat these patients. So I've seen very nice results of rehabilitation programs, which are very different from what we usually do in rehabilitation, specifically for long COVID with good outcomes. So it takes a long time. It is really a very bad situation for those people who are affected, but the prognosis is fairly okay, fortunately.
Dr. Levy, what can you tell us about what the government is putting in place? So we'll be able to see our loved ones for Christmas for 4 or 5 days. Do you worry about a significant case resurgence then in the early weeks of January?
That's what people predict, but we have to admit that lots of these predictions and model making is very often not correct retrospectively. So we'll see. I think even with the loosening of the restrictions in the end of December, I think we need to be really careful and try to be as responsible as possible. And I think you can also have a wonderful Christmas and a wonderful time with your family if you abide by the rules. Keep distance, keep your company as small as possible. Do not sit together very close to each other in a small room without any ventilation for hours and hours. So even within the restrictions that are going to be valid for that period of time, I think there's lots you can do to protect yourself and your family members. Because what good would it be if you have a fantastic Christmas time with your family and then your next family meeting is actually a hospital visit or even worse, a funeral?
Marcel Levy, thank you so much. Sobering words there from the University College London Hospital Chief Executive. Now we'll have plenty more, of course, on COVID-19. Coming up in the next hour, Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. That interview at 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
landscape have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. Dell and HP both reported quarterly sales that beat Wall Street estimates. The companies are being boosted by customer upgrades of personal computers for remote work and school during the pandemic. Dell and HP have taken steps to cut operating expenses during the pandemic, and they produced better than expected profits. Shares of HSBC are surging today. There's growing optimism that Europe's largest bank may soon resume paying dividends. On Tuesday, Goldman Sachs advised investors to buy HSBC shares. They're up about 50% from a 25-year low at the end of September. And that's your latest Bloomberg Business Flash. Tom?
Ritika, thanks so much. Equities, bonds, currencies, commodities, and just here at Dow 30,000, I want to give you one image, which is the differences year to date, staggering out almost 12 months from now, with still a big NASDAQ up 34% or so. The Dow, well, it's into the green, up 5%. Yeah, the banks have come along, but the blended banking index, the Keefe Bruyette index in America, is negative 16% year to date. I've never seen the oddities right now on a year to date calendar in November. Francine?
Yeah, Tom, we also have quite a lot of U.S. economic data, jobless claims to consumer confidence and personal income. And then I just want to show you Bitcoin. That's the one that I've been focusing on to give us an idea of what comes next. Coming up, we speak with Liam Fox, former UK Trade Secretary. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It's a team that will keep our country and our people safe and secure. It's a team that reflects the fact that America is back, ready to lead the world, not retreat from it. Once again, sit at the head of the table, ready to confront our adversaries and not reject our allies, ready to stand up for our values.
As the President-elect said, we can't solve all of the world's problems alone. We need to be working with other countries. We need their cooperation. We need their partnership. But also confidence, because America, at its best, still has a greater ability than any other country on earth to bring others together to meet the challenges of our time. And that's where the men and women of the State Department, Foreign Service officers, civil servants, that's where they come in.
Whatever you think, whatever your politics is, let's be direct. It is a great adjustment. The differential between Pompeo and Blinken is stunning. Right now, to give us perspective, is Liam Fox. He's a United Kingdom Conservative MP, the former United Kingdom Trade Secretary. But far more than that, I've got to digress here, Dr. Fox, to one key question. It is rare that we have on someone who's really experienced in the general practitioner trenches. That would be you. You're the real deal from the Royal College of General Practitioners. What is your advice to our listeners to get through this pandemic?
Stay calm, try to minimize contact where you can, and wait until we have the vaccine program in place. The basic truth in a pandemic is that if you don't have a cure and you don't have a vaccine, it will continue to spread through any population that doesn't have natural immunity. So it will continue to spread. The good news is that there is going to be the vaccine available in the new year, so at least we've got something to look forward to positively in public health in 2021, even if it won't be an instant solution.
And folks, there is your free doctor's appointment of the day. Not that Liam Fox has ever done that. Minister, if we could move forward to, I should say Trade Secretary, if we could move forward to these huge changes we see, how should the United Kingdom adapt and adjust to the Biden administration?
Well, of course, we don't really know what the picture will be. It looks as though President-elect Biden's picking a fairly mainstream team for the U.S. With experience. And, of course, there is still the situation where there is a split Congress, which won't be a change. So in terms of where the U.K. sits, we will be looking forward to an administration that is committed to multilateral institutions. We need reform of those multilateral institutions, and having a constructive US input would be helpful in that, from the WTO through to the World Bank and the IMF and beyond.
But Dr. Fox, does Biden's election mean that Boris Johnson can no longer realistically leave the single market at the end of the year without a deal?
Well, I think we will get a deal. I've always believed we would get a deal. And my belief in that has got stronger, because I think that not only is there an imperative for both the United Kingdom and the European Union to seek it for economic reasons, but I think that in the global situation at the moment, the post-pandemic global economy, there is a need for confidence to be stimulated. And I think that getting a UK-EU trade agreement would be one way to provide that. So I think there's almost an obligation on both parties that go beyond their own self-interest.
Is Joe Biden correct to draw a link between the internal market bill and the Good Friday Agreement?
No, I don't think so. Not as directly as has been said. But hopefully, of course, there is no need for us to have the European market bill anyway. It does look from the signals we're getting as though progress is being made on the Brexit settlement. My experience says that when we get into effectively a news blackout where no one is saying anything at all, that's the time when they're looking at the texts. That seems to be the indication from a little slip from the Irish Prime Minister. So I think that if the only areas where there was any real difference was over state aid and fishing, those are issues that can be bridged.
Mr. Fox, I want to talk about the idea, the core concept here, and we do this with American exceptionalism, that there can be British exceptionalism. What is British exceptionalism in 2021?
Well, I've never really agreed with some people's concept of American exceptionalism. My view is that American exceptionalism exists to the extent that the institutions and the Constitution of the United States and the commitment to enterprise and a free market allows ordinary people to do exceptional things. I think it's really about the system. And in the United Kingdom, I think it's the same challenge that we face in most Western countries. How do we get governments off the back of the people? How do we get a free market, free enterprise system operating in a way that we can use our natural innovation and creativity? So I also think that we need more commitment to multilateral institutions. We've had a lot of talk about regional trade agreements and bilateral trade agreements. Actually, we are much better to be looking for multilateral trade agreements. We haven't really had one through the WTO apart from the trade facilitation agreement since 1995. It's time that we pushed on that. And if we can't get that to move forward, then we need to look for plurilateral agreements, coalitions of the willing who are genuinely market economies willing to take forward greater trade liberalization, because therein lies the route to opportunity and prosperity.
We're just hearing from Rishi Sunak, the Chancellor of the Exchequer, of course, of the United Kingdom, talking about the OBR forecast on the UK economy, making for a sober reading. He's briefing the cabinet right now, and this is ahead, of course, of the spending review. OBR statistics show the scale of the UK contraction and the scale of debt increase. This is according to the Chancellor. But Liam Fox, let me go back to the deal that you're expecting between the UK and the EU. Is there a danger that Boris Johnson will give too much into the EU to get the deal at any cost? And are there any circumstances in which you and your colleagues would actually not back a deal that the Prime Minister would bring back?
Well, if you'll excuse me, there were just rather too many ifs in that question. I've always taken the view that, you need to get a trade agreement, there have to be some compromises. A trade agreement is not a take it or leave it ultimatum. It's a trade-off. And that's what you expect to get. And we will look at it, I think, very favorably. I think it's unlikely to see Boris Johnson giving away too much to the European Union. I imagined from the very beginning that both sides would fight and negotiate very hard in all of these areas. And I think that from what we can tell, and I'm not in a more privileged position than anyone else, I think that we're in the landing zone for an agreement. So, as I said, I think it's not only to the benefit of both parties, but I think it provides welcome confidence at a time when it's in short supply in the global economy.
What are your red lines?
Well, clearly, one of the reasons that we're leaving the European Union is that we don't want to have the European Court determining what happens in the United Kingdom. So that has to be an area where our sovereignty is protected. I think for most other things, we've seen agreement in broad areas that we want to see a tariff-free trading zone, that we'll want to see lower costs across the trading network. We don't want to see the introduction of new paperwork and new transactional costs in the economy. So
I'm placing a new order, ladies and gentlemen, to sell short Japanese yen. Okay, price I'm looking for 104.415. Right up here. Okay, order placed.
The sort of things that they want in terms of liberalization of services, the need to get some of those big agreements over the line, and then to look at things like an environmental goods agreement so that we can start to align policies on things like climate change with trade policy. And then we'll have the big challenge of the effect on COVID on the developing world with diminished demand from the G20, having an impact potentially on commodity prices, tougher employment circumstances, meaning fewer remittances. And I think we have to be slightly wary of whether we might be tipping one or two of those developing countries towards debt default. And of course, that's where we need to come in on the other side through the World Bank and the IMF.
Liam Fox, thank you so much, the UK Conservative MP and, of course, former UK Trade Secretary. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Joe Biden's made it clear he wants to calm international relations after tumultuous 4 years. The president-elect introduced a team of foreign policy experts he plans to nominate. The appointees will work with Biden on his goal of restoring U.S. ties with international organizations that President Trump spurned. Meanwhile, Biden is encouraged after just a day of transition talks on the coronavirus with the Trump administration. He spoke with NBC News.
We're already working out, meeting with the COVID team in the White House and how to not only distribute, but get from a vaccine being distributed to be a person able to get vaccinated. So I think we're going to not be so far behind the curve as we thought we might be in the past.
Biden and his team now have access to funds, current administration officials, and classified information. Increasingly, American students are attending school virtually. As of Monday, roughly 44% of students were going to virtual-only schools. That's an increase of more than 5 percentage points from a week ago. More than 30 states saw school closings in the past 3 weeks. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Futures flat this morning off of the big bang up yesterday. Dow closing 30,046. Futures now 29,957. How's it linked to the economy, on the European economy particularly? I'll speak with Eric Nielsen of UniCredit, their global chief economist, but much more to talk about with Dr. Nielsen. Futures -2, Dow futures at -43. 2 cents spread, a little bit of curve flattening this morning. Stay with us. This is Bloomberg.
Okay, guys, position opened, short position for Japanese yen at 104.415.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, let's talk about the markets and let's talk about the economy with Eric Nielsen. He's UniCredit Group Chief Economist. Eric, thank you so much for coming on. I know you look at the economy, but sometimes you talk about the markets. If you look at the fundamentals that we're seeing in the economy, the possible bad loans for banks, some of the scarring that could happen, despite a vaccine being available pretty soon, does it make sense for the markets to rally as they have?
No, I think the market is a little optimistic here. I mean, I don't belong in the camp who thinks that equity markets are priced completely out of whack, if you will. But the latest rally is, I think, for me, is a little overly optimistic. But maybe we are going to a place where we need to learn to have prices which are even further away from earnings. But let's see. We're heading into a good earnings season for sure, right?
What do you worry about in the economy that people are not seeing right now? Is it scarring, or are you optimistic that the pickup, once we have the vaccine, can be quicker than expected?
I worry, number one, on the economic side, I worry about whether we understand or predict correctly what the private sector, particularly households, will do with the huge savings they have. I mean, both in America and Europe, we have basically household savings double the normal, 25% or thereabout. And once the vaccine comes, are we all going to go out and have a party and then start to have all this social consumption again, spending and traveling? Or will there be a lot of precautionary savings for a long time? And how will then the policymakers react to this? So this is the big thing. Also, what do people spend on? We have had a very strange and a completely unprecedented composition of spending towards durables this time we've never seen before in a downturn.
Well, that's really important. Is 60-70% of the economy. Eric Nielsen, what would you suggest will be the consumption pattern of 2021?
Well, I think we are going to have a tale of two parts, Tom. I think in the winter we will continue to see what we've seen very recently, which is a big shift to durables. So people buy furniture and on refrigerators and build on the house because they don't spend the money on traveling and restaurants. But then once the vaccine sort of is rolled out to the general public, hopefully by summer or sometime into next year, then I suspect we can see a big shift. Now we bought our furniture and everything else, and now we really need to go see each other again in a restaurant for a beer. So big shift back to then social consumption.
Well, I mean, the social consumption, is that enough of a GDP to lift us not so much out of recession, but to shift us away from disinflationary trends?
This is tough to say, Tom, because what you are seeing now, and you will see also in that process of 2021, will be, I'm sure, very big relative price changes. So the inflation sort of concern is going to be completely muddled by big relative price changes for a couple of years. But the underlying question of inflation, no, inflation won't come back. There's just the output gap will be too big to drive inflation back to the targets for a long time.
Eric, what does Janet Yellen as Treasury Secretary in the U.S. mean for the rest of the world?
Wonderful news, in my opinion. It is on a couple of things. First of all, I think her philosophy and her thinking is more along the way we in Europe think about fiscal policy. And obviously she's super competent, so that's good. She's an internationalist, she's a globalist, she believes in multilateralism. So this is all very good. And then I quite like, as a more quirky thing, that while they're taking in America, seemingly a former central banker who make her finance minister. In Europe, we are having finance ministers taking over monetary policy. So it smells like in the post-pandemic world, we'll get a much better understanding and cooperation between fiscal and monetary policy. That's my dream, at least. So, and I think it looks good so far, at least.
So, Eric, does it mean that, we'll limit the chances of a policy mistake? And is a policy mistake actually going too big now? Or do you, as you've kind of intimated, do you have, reservations about a resurgence of inflation into 2021?
No, I mean, Francine, there will be policy mistakes. It's impossible to navigate such a big shock without making mistakes along the way. But I think the key issue is, and I'm actually quoting now from a Draghi speech before he left the ECB, leadership is about getting all the information, having the guts to make the policies that you think are right, and then the humility to adjust along the way. I think I got that right in the way he put it. But that's it. That is key, right? And getting Janet Yellen in the Treasury in America certainly gives you the competence, and I'm guessing, the guts to try to do it and then inform yourself along the way. The risk for me is that policymakers will do too little. I cannot see any serious risk of doing too much. In Europe, we risk doing that, but too little. And we should try rather err on the side of doing too much.
Eric Nielsen, thank you so much. With UniCredit, their chief economist, just thrilled he could be with us this morning. I want to review the markets here right now after the extraordinary day yesterday, and you heard the president speaking about Dow 30,000. Red and green on the screen right now. NASDAQ lifts back to 12,000 level on a NASDAQ, up 34%. So far this year. The VIX fractionally under 22, 21.99. Really interesting to see what the VIX does here, how it resets around certainty and uncertainty. Yields come in, but really haven't done much in the last couple of days. Brent crude 48.66 as well. DXY signaling a weaker dollar. This is Bloomberg. Julian Emmanuel next.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. I strongly believe central banks need to be independent and need to do everything they can.
I do see the sentiment and the push is now
going very much in the direction of deregulation, reducing buffers, reducing authorities, and I am worried about where this is going. Appropriately designed tax reform could have a favorable effect on productivity. Of course, it obviously depends on the details of what you do. We need public policy oriented toward making a big difference on climate change. A very efficient way to price carbon would be to go to the mine head, the well, where energy that creates carbon emissions enters the economy, and to simply levy a tax. While the tariffs may make goods more competitive, the appreciation of the currency will offset that. So I regarded that as not the proper focus. But let me be clear, I do think the United States has real issues in terms of its trade relations with China.
The economist, Janet Yellen, and you heard the economic talk there. How will that shift in the coming weeks? Francine, it's going to be absolutely fascinating. I really can't remember when we had somebody this unique and this senior of a position.
Yeah, Tom, and I think it's the first time that actually someone goes from, being the president of the Fed to actually being a Treasury Secretary. And this is unprecedented times. And so it'll be interesting to see how she calibrates this. And then, of course, that Bloomberg story, Tom, that Steve Mnuchin is planning to set aside $455 billion. That would make it much harder for Janet Yellen. And she will need authorization from Congress to use it. It'll be interesting to see how she navigates that in the first couple of months, Tom.
Well, as a first battle in Washington, and this, of course, presumed after the inauguration of January 20th. In our next hour, William Lee of the Milken Institute, a perfect time to catch up with him on the changing administration. Bill Lee also on the Pacific Rim. Please stay with us. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
it is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
This morning, down 30,000 in this unloved bull market, down 40,000. Well, that extrapolates out to Christmas 2023. JP Morgan this November elevates 26%. Oil this morning lifts, the dollar ever weaker. In California, 12% of infected will be hospitalized. Italian deaths are back to late March levels. Good news, though, Britain sees, quote, steadily declining cases. In corn, in Cobb, well, they're resting comfortably after presidential pardon, each weighing in at 40 pounds plus in the wingspan of a B-52 bomber. No word on the presumed December presidential pardons. Good morning, everyone. Bloomberg Surveillance. Tom Keene in New York. Francine Lacroix in London. Francine, it is a tradition. Now, President Truman, back coming out of World War II, they didn't pardon the turkeys. They showed them off, they killed them, and they had them on the table. John Fitzgerald Kennedy was the one that began the survey of pardoning, the symbolism of pardoning the Thanksgiving beast.
Yeah, what I want to know is who names them, Tom. I mean, every year the names are absolutely, amazing and original. This year, Tom, was interesting also because we had a very, very short press briefing from the president just after that pardon, and that was on Dow 30,000. I would suggest Dow's at 30,000 because Tom Keene's cooking a turkey for Thanksgiving, but actually, it's a very important psychological level, and then we'll see what the next level after that is.
A lot of people, I'm glad you mentioned that, Francine, a lot of people play it down. I don't. These are huge benchmarks, particularly for people of an antiquated day who remember their first day on Wall Street when the Dow was like 323 or whatever it was. We won't go there. With our first word news in New York City, here's Ritika Gupta.
Morning, Tom, Francine. Joe Biden wants to change the White House slogan from America First to America is Back. The president-elect introduced a team of foreign policy experts he plans to nominate. Biden's goal is to restore U.S. ties with international organizations that President Trump spurned the last 4 years. President Trump heads today to Pennsylvania in his campaign to overturn election results there. He'll meet with state Republican lawmakers examining accusations of voting impropriety. Pennsylvania has already certified that Joe Biden won the election. Trump supporters complain that observers were not allowed to be close to workers counting votes. U.S. health officials are working on guidance to shorten the 14-day quarantine period if they're exposed to the coronavirus. Officials are starting to see more evidence that suggests people could spend less time in quarantine as long as they test negative for the virus. Shortening quarantine times could mean more people comply. In Hong Kong, Chief Executive Carrie Lam has vowed to keep strengthening ties with China. Lam used an annual policy address to defend Beijing's tightening grip over the city. She also announced new steps to boost economic links with the mainland. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Ritika, thanks so much. As Francine mentioned, let's do a data check. Let's do it with the President of the United States.
Well, thank you very much. And I just want to congratulate everybody. The stock market, Dow Jones Industrial Average just hit 30,000, which is the highest in history. We've never broken 30,000, and that's just despite everything that's taken place with the pandemic. I'm very thrilled with what's happened on the vaccine front. That's been absolutely incredible. It's nothing like that has ever happened medically, and I think people are acknowledging that, and it's having a big effect. But the stock market's just broken 30,000. Never been broken, that number. That's a sacred number, 30,000. Nobody thought they'd ever see it. That's the 9th time since the beginning of 2020 And it's the 48th time that we've broken records during the Trump administration. And I just want to congratulate all the people within the administration that work so hard. And most importantly, I want to congratulate the people of our country, because there are no people like you. Thank you very much, everybody. Thank you.
A very short press conference for the President of the United States, but noted yesterday. Right now, futures at -70. I guess I can do a data check here very quickly. -5, Dow futures -66. NASDAQ 100 goes green the other way. We'll see where we end up. VIX 22.02. Francine, I just note oil elevated today, $48 a barrel on Brent crude.
Yes, crude oil actually holding about 45. I also had that in my data check. Treasuries are pretty much steady. I wanted to show you Bitcoin just because we've seen it, you know, I think it's still a sliver away from a record, 19,342. And then down the caution that we're seeing in Europe, down 0.4%. But again, it was after a pretty extraordinary day yesterday. Is also because we're expecting data out of the U.S., jobless claims. Of course, we're also expecting consumer confidence and personal income. And it could be another big day for the markets as then traders head off for the Thanksgiving holiday tomorrow, Tom.
Very good. This we need to be careful on. This is not speculation, but there is a lack of clarity to the president's agenda today. Kevin Cirilli knows the landscape of Gettysburg, of course, the historic battlefield there, but also a place, seriously, where people meet in Pennsylvania. Kevin, I believe Attorney Giuliani, and it is reported the President of the United States are, some will say, going to the Wyndham Hotel in Gettysburg today for a, quote, hearing, unquote. Do you have any other reporting on this unique event?
No, but President Trump has a history with Gettysburg. He's spoken there several times, and it is, as you mentioned, really a historic site, obviously dating back to Lincoln. So the backdrop of all of this is adding to the intrigue, so to speak, with regards to where President Trump goes from here and what his calculations are for the next couple of years. You know, I was having a conversation with someone yesterday just about how the speculation in conservative circles is at an all-time high in terms of how President Trump is looking to plan out his future. And I say future, business future, political future. And that's really the two question marks that Washington is thinking about and increasingly Wall Street is thinking about as well.
Kevin, do you anticipate that the President of the United States will be in like a hotel conference room, 95 Presidential Circle 17325, with his attorney talking, I believe, only to Republican legislators? Kevin, what would they speak of? What would he say? Or does he literally just appear to support Mr. Giuliani?
I think it's a mixture of both. And I think that even by showing up, it continues. Look, I mean, here are the facts. If you look at the polls, the president has significant support amongst the base of at least the base of the Republican Party, and he was able to successfully, in the base of the party. Now there are questions about the legitimacy of votes, and so that has made it incredibly uncomfortable for Republicans like the 7 or so who have come out publicly this week and said that it's time for a transition to begin. But that's where things are as we are at the not just the end of one administration, but at the start of a new election cycle.
Kevin, good morning. When are we going to see more appointments from Joe Biden?
Next week, we're hearing, is when the financial team is going to be announced formally, similarly to what we saw this week. I mean, this is part of a broader rollout strategy where the Biden transition team feels that they can successfully carry a news narrative and a news cycle forward. You saw that yesterday with the individuals on the stage from Tony Blinken, who I was struck really did speak about in really somber tones and moving tones about his own family's experience with the Holocaust. And so I think you're going to be seeing that next week as well, with the likely naming of Janet Yellen, the former Fed chairwoman, to lead the Treasury Department, and the dynamics and the math that is shaping up in the Senate would appear for there to be no significant hurdles for Fed Chair Yellen to be confirmed at the Treasury Department.
Kevin, what can you tell us about, Steve Mnuchin's plans to put these $455 billion, beyond easy reach for his successor? Like, how much people are, how are people talking about it? Does it feel petty? Does it feel justified?
Democrats would say it's petty. Republicans would say it's justified. I was up on Capitol Hill yesterday, and I spoke with the source who said Senator Pat Toomey is going to be the chairman, likely, of the all-important Senate Banking Committee, which is the committee that Yellen will go through in order to be confirmed, and that Mnuchin went through to be confirmed. And Chairman Toomey will likely be a caretaker type of chairman, simply because he's not going to run again in 2022, and he will serve as a check and a balance for the financial community, likely, and Main Street, on pulling the administration too far to the left. I say all of that because those are where the hearings are going to be, with the $426 billion of the Federal Reserve money that is now being given back, and Chairman Toomey will have is sympathetic to the argument that's the outgoing Treasury Secretary Mnuchin is making. So it's going to fall on partisan lines.
Interesting. You bring it full circle, Kevin Surley. Quickly here, does Senator Toomey want the president to go to Gettysburg today?
I don't know if Senator Toomey wants to run for governor, so I don't know. I think I don't know. But he was one of the first senators to come out and say it was time for the transition team to get their briefing.
Kevin, I want you to break out this year. Would you try some dark meat this year? Don't just hog. Just don't hog the white
I'm a stuffing guy. I like stuffing and mashed potatoes.
There we go. I'm on the same page. Kevin Surley, have a great Thanksgiving. Our Bloomberg Chief Washington.
News you can use.
That's news you could use. There's stuffing, and it doesn't show, of course, at all. He's cut and chiseled, unlike others. Coming up on Balance of Power, Peter Navarro, always controversial assistant to the president. No doubt, Mr. Navarro on the new U.S.-China relationship. Stay with us. Red and green on the screen. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's a team that will keep our country and our people safe and secure. And it's a team that reflects the fact that America is back, ready to lead the world, not retreat from it. once again sit at the head of the table, ready to confront our adversaries and not reject our allies, ready to stand up for our values.
As the President-elect said, we can't solve all of the world's problems alone. We need to be working with other countries. We need their cooperation. We need their partnership. But also confidence, because America, at its best, still has a greater ability than any other country on earth to bring others together to meet the challenges of our time. And that's where the men and women of the State Department, Foreign Service officers, civil servants, that's where they come in.
Good morning, everyone. The rollout again of part of Mr. Biden's Biden administration. Joining us now, William Lee, the Milken Institute, chief economist, but far more a broad reach with his service to the International Monetary Fund of the global political economy. We're thrilled that Bill Lee could brief us this morning. Bill, let me just cut to the obvious question. Is this Obama due?
Well, you know, the Obama #2 is going to face a very different world than Obama 1. The multilateral framework has changed significantly. We have a growing sense of regionalism. Globalization has really reshaped itself into regional blocks. And within, say, the Pacific bloc, where we just saw a new trade treaty put together, China is really starting to do two things. That dual circulation strategy of theirs is to turn inward and build up their domestic demand and domestic markets, and at the same time reassure everyone that they still want Belt and Road. They still want everyone to be trading with China. So these consolidations are taking place. Boris Johnson, unfortunately, is coming out with Brexit at exactly the wrong time. He would have had a much better reception with President Trump, who wants to have bilateral relations, as opposed to President Biden, who has really committed himself to being a Euro fan, someone who wants to promote the Euro Union and our relationships with the Euro Union.
Bill Lee, when we look at the meter of all this, and we can begin with David Weston's conversation today with Peter Navarro of the White House. Look for that in the 12 o'clock hour, folks. How far away really will the outcome of policy be of a Biden administration from the stridency of Dr. Navarro?
I think the tone will be completely different. I think there's going to be a lot more soft talk and brie and chablis meetings, as opposed to the very beer and chips kind of approach of the Trump administration, where it's show me what you've got, and if you don't have anything, let's not even bother to talk. One of the frustrations I think that people have had during the Obama years is that the brie and chablis meetings really have resulted in a lot of talk but very little action. And I think one challenge for the Biden administration is to see if they can break through that, given the changes that have been put in place in the last 4 years, to capitalize on, we've got tariffs. So if you want to have better relations with us, let's talk about removing tariffs in a strategic way that benefits both of us. So I think the Trump administration has given the Biden administration a lot of tools that they can use that they didn't have before in accelerating these multilateral talks.
But Bill, we focus and markets focus so much on actually, multilateral talks, on globalization and a return to normal. What does it mean for the near 50% of Americans that felt left out? What can Joe Biden and his administration do to mend the divided United States of America?
That's a great question, and that's exactly the point, the challenge for the Biden administration. He's going to have to face 73 million voters who said, I really didn't like your approach. Now convince me you can do better. And he's going to have a very skeptical audience. So he's going to have to show that multilateral relations mean better jobs and better income and bigger consumption baskets for everyone, including those who may be displaced by trade. So the first thing we learned about international trade is it benefits everybody if you have subsidies and real allocations of labor and capital within the economy to go to different sectors. Reallocation is a nice term to use in a textbook, but that means job losses and job gains, and to make sure that the people who lose jobs have enough income to tie them over to get them into the new jobs. And that's going to be the domestic challenge for Chair Yellen as Treasury Secretary, to reshape the financial system, to direct funds to where it's needed, and the Labor Secretary to retrain people in a way that gets them jobs that would tie them over into the new economy.
Bill, what does that mean for debt creation, and what does that mean for companies overall in America?
it's going to take some spending, and fortunately for the world, all the debt increases that have gone and put in place because of COVID can be accommodated, and if it's thought to be temporary, it can be accommodated very easily. But if the new economy is faced with a lot of entitlements, and the new programs that are put in place by the Biden administration are going to expand the entitlements that permanently increase our deficit, then the fiscal hawks will start to come out, and we'll start to see, probably in about 5 or 10 years, but not immediately, a lot of consequences for displaced capital and distortions in capital flows. But that's not a problem now. Right now, the problem is get the economy going, and it's time to get in big and spend big in order to restructure the economy in a way that we can work well in that post-COVID economy.
William Lee with the Milken Institute with us, thrilled that he will continue with us here. We must speak to him on the Pacific Rim, and particularly on foreign exchange, is the dynamic of the Pacific Rim. She is expert on the Pacific Rim, and also, of course, so much more of our international economics. This is the joy, folks. I mean, this is for real. From William Lee to Catherine Mann, Citigroup's chief economist. Look for that in the 8 o'clock hour. A wall of economic data out at 8:30. Michael McKee.